Why is oil up 30% since the beginning of the year?
I think there are very good reasons for it to be up 30%. I'm surprised it's not up even more because we've obviously had OPEC cut production, but since then you've had Venezuelan production fall very, very sharply. There are no exports going to the U.S. right now, so we peg Venezuelan production at about 700 to 800,000 barrels per day. The market's actually very tight, especially in the physical grades. You can see that refineries are coming out of maintenance, and I think this is just the start. You are going to see some more upward pressure on crude prices over here.
We talk about today being the first day of spring, which means that the summer driving season here in the U.S. and other places around the world just getting started. So what is the outlook for oil prices and gasoline prices as we head into May, June, July?
I think oil prices should remain supported. And like I said, I think we can see another $5 to $8 higher gradually, not like immediately, but over the next few months on oil prices. Gasoline, however, of course, we've seen a very significant increase as we've switched to the summer grade, like you said. But overall, we remain quite negative on the outlook of gasoline prices simply because there is a lot of light crude around, and that is leading to a lot more gasoline and naphtha production compared to the tightness, which is really in the heavier and the medium grades, which is what Venezuela and Iran produces.
So Amrita, we heard over the course of the past few days a lot of commentary coming out of the OPEC meetings in Azerbaijan. There is not going to be an April meeting now. What exactly is OPEC and its partner countries, what are they thinking about whether production cuts will stay in place or whether they should start to maybe ease a bit and let countries take advantage of the higher prices we've been seeing?
So I think the first and foremost thing in terms of what happened at Baku is that, yes, they decided to cancel the April meeting. However, this isn't because there's a rift between Saudi Arabia and Russia or any other country. The reality is they would only have February data when they met in April. It's just too little data to go on. And when they had decided to meet in April, back in December, Venezuelan sanctions wasn't a reality. So they do need more time to assess where the market stands. Our conversations with our sources suggest that it's more likely than not that they will continue with the cuts when they meet in June. OPEC do want to keep inventories in check. They want it to be around the 5-year average or slightly lower. They definitely don't want the market to be oversupplied. But all they're doing is just buying time rather than, a shift in policy. And I think Saudi Arabia, leading from the front with production at 9.8 million barrels per day, is very, very clear in its message that that's what they're staying their course. And again, also remember, we've got the Iranian waivers coming up on the 4th of May. Meeting in June gives them a little bit more clarity about where Iran is going to be, where Venezuela is going to be, rather than rushing into a decision.
Supply has been a key focus for yourself, I'm sure, and many others out there. Let's talk about the demand side of things. How exactly do you see the story playing out from a U.S. economic standpoint, a global economic standpoint? Is there enough demand there to support oil prices as well?
I'd say, and it's a great question, I'd say that, supply has been the main factor why oil prices have gone up 30% since the start of the year. And I think that's why it's going to continue to go up towards, say, $75 for Brent. But I think the critical thing over here is demand, because that's what really led to that decline in prices, at least part of it in Q4. Demand had come off very, very sharply. We have started to see stabilization, particularly in Asia. Chinese demand is starting to pick up. The government is starting to boost the economy over there. So I think that's really helping. But we are concerned about European demand. The outlook doesn't look very positive at all. U.S. demand is healthy, but it is slowing because, again, there are a lot of headwinds when it comes to economic growth. That said, with the Fed pausing and, like you said, again, very important decisions coming up, we do see the economy is going to stabilize, and that means oil demand growth is going to stabilize. So we're not expecting fireworks, but we definitely don't expect a collapse in oil demand either. So as long as growth remains stable at around 1 to 1.2 million barrels per day of growth like this year overall, globally, I think oil prices, have a lot of upside from here.